$150 billion. Just unlocked. Supreme Court kills Trump's tariffs, 6-3. Oils up 9% overnight. And one stock down 39%. Stick around.
Futures barely blinking. S&P up a touch, Dow down a touch. Tokyo's up over 2% overnight. Hong Kong's down more than 1%. The real mover today isn't the index, it's crude.
The Supreme Court just struck down Trump's tariff regime, 6 votes to 3. A year of pricing in, undone in one ruling. $150 billion in refunds now owed to importers.
Here's the story everyone's telling. Tariffs are dead, stocks should cheer. Wrong frame. This is a balance sheet event before it's a sentiment event. Refund cash lands on corporate books first, market mood second.
Import-heavy retailers and automakers ate these tariff costs for a year. Now they book the refund as a windfall. Watch earnings revisions there before you watch the S&P 500.
SPY closed around 773, clear 776.85, and this refund story straight into the index. Lose 729 and it's just noise on a ruling that changes nothing for earnings. Traders aren't exactly cheering though. SPY's sitting 0.5% off its record high, priced at 26 times earnings. Rich by any measure, and nobody's talking about it. $150 billion unlocked. And here's the number nobody's saying out loud. One market indicator just flashed a warning not seen since the dot-com bubble. Worth knowing before you chase the high.
Forget the tariffs for a second. Crude's up over 9% today. Hormuz talks are souring, and that number hits every consumer stock with a fuel bill. Trump says the US is, quote, only semi-negotiating with Iran. Markets read that as talks breaking down. USO's up more than 9%. That's higher gas prices and thinner margins for anything that ships or flies.
Every airline, every trucker, every retailer with a delivery fleet just got a margin squeeze. Consumer-facing names feel this before the index does. Watch your fuel-sensitive holdings into the close.
Intel just diluted shareholders by $20 billion, pricing the sale at $95 a share. That's the real cost of staying in the AI race. Not a headline, a balance sheet hit.
This is the pattern now. Chip makers spending whatever it takes, funded however they can get it. Intel's diluting, others are borrowing against the boom itself.
$500 billion. That's what Nvidia's lining up with Wall Street to finance AI infrastructure. Jensen Huang telling CNBC his chips are now, quote, an investable asset, collateral-grade computing.
Right. Chart of the day. Forget the ruling for a minute. The biggest number on the whole board is crude, up over 9%. And here's the level that tells you if it's real. USO's trading around 129. Clear 135 and this Hormuz premium is real. Fall under 120 and it's overdone. Reparations talk is already the tell. Now, the stock I promised, down 39%, is next.
Right, the name I promised you, Netflix, down 39% from its high, but upfront ad commitments just nearly doubled. Real revenue arriving before the market reprices it.
The consensus says Netflix is done growing, priced for perfection at the top. The real question is different. Can ad-supported subscribers replace the growth story before Wall Street notices it already has?
Netflix is down 39.5% from its high, sitting around $76 a share. That's the kind of drawdown that gets a stock on the oversold list. Analysis, not advice.
The level that decides it, clear 80 and the bounce is real, targeting 91 next. Lose 65.08 and this drawdown isn't done yet.
Look, the crowd's leaning into this one. 89% agreement. Stance is buy, direction's up. Netflix might be the most quietly bullish setup on the board right now. Tariffs unlocked $150 billion in refunds. Oil's the real story underneath it. and Netflix is the name to watch off that 39% drawdown. Full breakdown daily at PremiChart.com and on X. See you tomorrow morning.